Oil prices are on track for their worst week since March, with demand fears and the prospect of more supply coming onto the market driving the losses. A key pipeline supplying oil between Iraq and Türkiye is set to resume operations. The Kirkuk-Ceyhan pipeline will be able to pump 500,000 barrels to global markets. Exports were suspended in March over a dispute between the federal government in Baghdad and the Kurdish Regional Government in the north. It comes after Russia announced the lifting of its ban on diesel exports. It's adding to worries that demand could be dented in an environment of higher for longer interest rates. And an OPEC-Plus meeting made no changes to the group's oil output policy after Saudi Arabia and Russia said they'd keep voluntary supply cuts in place to help boost prices. Well, for more on this, let's bring in energy analyst Andrei Kovatariou. Really good to have you with us, Andrei. Firstly, not a good week for oil prices, but it was really a bit of a blip rather than an overall trend, given that crude surged almost 30% in the last quarter. Where are prices going from here on in, do you think?
That's a very good question. And I think the short answer would be that they will zigzag for a while. They will zigzag for the next weeks, probably, because they are in between those two extremes, the bullish fundamentals. We obviously have tighter markets and relatively low oil inventories. But at the same time, we have bearish factors related to the economics and global, let's say, market overviews. So we are seeing higher for longer interest rates. We are seeing inflation. We are seeing bad numbers when it comes to gasoline purchases in the US. All of that will drag prices down. So I do believe they will be zigzagging for a while, and they will probably stay above $80 per barrel, but I'm not sure that they will reach $100 per barrel anytime soon.
And of course, that was the fear even last month, wasn't it? That prices would hit that 100 barrel mark figure. But let's look at OPEC Plus, because at least for this month, they don't seem too worried about depressed oil prices, keeping their current supply cuts at the current level. But how long will that last, do you think? What do you expect they'll do going forward?
So I think the floor of $80 per barrel is still safe. So I think that's a prerequisite of any policies coming from OPEC or OPEC Plus. We will see. I do believe that in the next couple of days, depending on how the prices will go, we may see some declarations coming from OPEC or OPEC Plus that would probably help prices bounce back a bit. But it really depends on what happens next year. Probably this year we will not see changes in the cuts or in the volumes, but it really depends on how next year would look like. And it also depends on how non-OPEC volumes are coming into markets. We are seeing increases in the US and some other regions, so that will be factored in by OPEC Secretariat, of course.
You mentioned earlier the prospect of higher interest rates staying in place, and that, of course, is fueling fears that perhaps that might slow down economic growth in some key markets such as the US and Europe and even China. How will that impact the demand for oil and crude prices, not only in the coming months, but also in the new year?
One would argue that that is already impacting oil prices, and we've seen job numbers coming now from the US that has the elements to actually keep interest rates higher for longer. So we may see some sort of a demand destruction that is probably already happening to some extent, and that may affect prices, and that may bring or keep prices down. But it's important to understand that next year we will have elections both in the EU and the US. So probably any macroeconomic, let's say, policies will have to be deployed this year, because next year that will be an election, let's say, topic, and the current governments want to avoid that. So I would expect the very difficult part to be in Q4 or Q1 next year, and then prices to be oil prices to not be affected that much on the interest rates. But remains to be seen. There's a lot of volatility in the market.
Well, that's right. And you mentioned the prospect of elections. We know the US is going to the polls next November to choose a new president, and petrol prices are always a hot button domestic political issue in the United States. We do have countries like the US and Canada really pushing for more shale oil to come onto the market, but that's not likely to affect the crude production and prices in other parts of the world, is it?
Well, it depends. We are seeing probably the expectations are for 2024 that around 1.5 million barrels per day will be produced by the US and Canada combined. So that's 1.5% of the oil demand daily. If we add to that other volumes that you were talking about, for instance, coming from Iraq to Turkey, that's already 2 million barrels per day. So that may affect other regions and the prices, the global prices. It really depends on how many volumes are put into the market at the end of this year, at the beginning of next year. And it's also very important to look at inventories. They are relatively low, but volumes are added there. So the situation looks a bit better than it looked a couple of weeks ago. So that is also important to look forward.